This was just a brutal week to trade. I did not enjoy this week at all. Monday and Tuesday, honestly, were pretty good trading days. I had a good time there, but these last 3 days were really, really bad. Today wasn't as bad. I was able to play a couple decent things, but I didn't, it's just the technicals weren't there and just premiums weren't paying, and it was just a tough week. Today's one of those weeks where, or this week's one of those weeks where you remember that there's more than one trading day a year, and we have to live to survive the future. So taking a look here, we have this nice pattern forming, and we started up here, we all the way back down here, kind of had a bump up, and now we came back down. So if you look at last CPI, we're actually seeing a similar pattern. We kind of had a move down, a bump up, and then we dumped into that Monday before CPI, or I guess this was maybe a Wednesday before CPI. And then actually, if we go back to October CPI, kind of a similar pattern. We had this kind of peak, and then we kind of dumped right into CPI. This is where we ran that 6 days in a row, and then got that big green, or the big red open with the green reverse. And then, let's see, September CPI, similar, but not quite. We had a big dump into it, and then popped, and then dumped. So here we are. Let's see, let's look at the technicals. So what I'm seeing here is I mentioned that we had this nice diamond pattern formed here, and whatever way we broke out, we were going to go pretty big probably. So we did break to the downside. We yesterday had closed back in that key 395 area. Pretty much since last CPI, we've been trading 395 to really 402.3. So the thing that happened was that we had that J. Powell meeting that took place back on the 30th. So if we were to factor this day out right here, we would actually be trading we probably would have ended the week somewhere down here if you were just to shift everything by about 3%, because we had this huge 3% day. But if you look at it overall, this whole month since the last CPI, we only traded about a 3% total gain. So I'm just pulling up my numbers real quick here. Where's it at? Yeah, so total, if we look at the last, all the CPIs all year long, on average from the top or bottom of the CPI candle, whether it was red or green, to the highest point, so the biggest move, either plus or minus from CPI to CPI, on average, markets have moved about 8.2%. However, since this CPI closed right here, the biggest move up we got, or down, was 3.2%. So that means we really did not see any movement, and we saw about 46% of the average movement that we see from CPI to CPI. We have been extremely flat here. This is actually, I think, probably the biggest consolidation period we have had this year. We had some decent consolidation, like right here, some right here, definitely right here. But, I mean, for the most part, this is the tightest consolidation that we have had all year long. So, kind of what I'm seeing here is that we attempted to break out and close over the daily 8 EMA here, but we rejected hard off this resistance for the diamond pattern, and we fell all the way back down, and we fell through the bear channel support right here, this bull support right here of the diamond. So that breaks us down. I'm envisioning that come Monday, we're going to see more risk come off. We had that pretty impressive sell-off end of day here. And basically pretty much what happened is we had a huge candle down, a recovery to kind of fill the gap basically, and then we just started leveling down from there. And the end of the day, it really got aggressive. So I'm eyeing that Monday is going to be a very similar repeat. We could open flat. We could even open all the way up here at like 395.9 maybe. I would doubt it though, maybe up to 395. And then I think we're going to see an unwind. I would not even be surprised to see us close below 390 on Monday. So a couple things to note is the CPI finally came out. We finally got our consensus. So year over year consensus is 7.3. Month over month is 0.3. Core year over year is 6.1. And core month over month is 0.3. So best case scenario is year over year CPI beats, month over month beats, core year over year beats, and month over month beats. for core. However, based on how PPI reacted today, which they focused on the month over month, not the year over the year over year, I wonder if we are going to get a reaction to the fact that we have not had a negative month over month print yet. Sure, year over year has been coming down consistently now since, since July. We have not had a CPI go up. And based on the numbers, unless the variance is very far off this CPI, we have not had, or we will beat on year over year CPI regardless. Worst case scenario is that the year over year CPI beats, we miss a month over month, we get a no change on core, and we get a miss on core month over month. This is the scenario I envision, and I envision that we are going to get a similar setup to September. So back in September, if you remember, it was the exact same thing. We had we had year over year CPI come in at 8.3%, which was higher than forecast. But below previous, which was 8.5%, we had CPI month over month come in at 0.1%, which was slightly higher than the previous 0% and over forecast. We had core year over year come in at 6.3%, which was forecasted at 6.1 and definitely was a big miss of 5.9 in the previous. And we had month over month core come in at 0.6%, which was forecasted at 0.3%. And we got a meltdown. So even though year over year CPI had beat, markets focused on core and month over month. This weekend, I'm going to look through it more and see if we had any CPIs where core didn't change and year over year CPI beat, but month over month missed. I want to see what our results were on days like that. I'll do some research this weekend and see what happened. So kind of what I think is going to happen based on this price action, and I'm going to zoom out here first to kind of talk about what I think is forming here, and you can see it pretty clearly here. So we cycle. We have these moves down, followed by moves up, followed by moves down, followed by moves up. And we are starting our next move down. So effectively, and the weekly here shows it even better, we just put in the peak last week on the 1st when we touched 410. Being that we put this peak in, we should start looking for downside. And I think regardless of what happens with CPI and with FOMC, I think we're going down here. And I think it started this week. If you think about it, we had a really big meltdown on Monday and Tuesday. And even last week on Thursday and Friday, we kind of had these drops. We were right here. We were ready to break out. We had everything we possibly needed to break through bear channel resistance of the 2022 bear market and essentially say that it's quote unquote over and we were going to start pushing up this way. But we had no momentum. Everything's gone. We lost it. We had 2 red days here on Monday and Tuesday on seemingly, as far as I can still tell, zero news. There was no news of why we had this big sell-off. Wednesday and Thursday were just terrible days. We ended up closing green on Thursday, but just terrible days. And then today we get that PPI reaction. We did have a green day for a while there, and then we obviously dropped down here. So I'm envisioning, is what I'm going to be watching for, is come Monday, we're going to touch 390 and most likely close under it, somewhere in the 380s high end. And then I think we get a pretty big miss on CPI. Like I said, I think year over year CPI is going to beat regardless, unless we have some crazy outlier variance or something like that, which I would be shocked to see. But I think month over month on core and CPI misses, and I think core is either unchanged or misses slightly. And I think we're going to end up in this 370 range. And then we got FOMC on Wednesday. So FOMC on Wednesday is an interesting catalyst also because we're going to get the dot plot, which is a big deal, and a lot of people are waiting for the dot plot. And not only that, but we are going to find out what rate hike we're getting. Now, right now, it's pretty much assumed, and I think last time I checked, it was about an 80% chance. It's a 75 to 80% chance that we are for sure going to get priced in wise at 50 basis point hike. And I think that's fair. I don't think regardless, unless we get some unbelievably weird outlier CPI where all the estimates and consensuses and stuff like that miss by a long shot, which I really don't think that's going to happen. But if that were to happen, though, I think he could go for a 75, but I don't think he will. But regardless, I think we're going to get a 50 basis point hike. But what's going to matter is what Jay Powell says next. If he says, okay, yeah, we still think we're on a good path, we are seeing inflation tame, we don't see a need to continue our rate hikes at 50 basis point, we're going to drop to probably 25 next meeting. And he probably won't like clear cut and dry say, yeah, we're going to go to 25 basis point hike next meeting. But if he starts hinting at that and talking about the success and that the federal funds rate isn't going to be as high as they expected and stuff like that, I really believe that we could get a pretty big green FOMC day. But I don't think that's what's going to happen. I think the dot plot's going to come out and people are not going to like what it says. And I also think he's going to say 50 basis point hike, but then I think he's going to follow it up and say that it is premature, just like he said back in November, or I guess October, that it's premature, November, whatever CPI was last, or FOMC was the last, that it's premature to slow rate hikes. I think he's going to say that we need to do 50 and 50. And that's going to be a really bad reaction to the market. So especially if you considered everything he said at this meeting right here and how his tone had changed and he was bullish. I've never seen him that dovish. And I don't think he meant to be dovish. I really, really don't. I don't know what caused it or if, there's a bigger plan and he did that to prevent us because we were obviously on a path down right here already and we weren't going to get to the bear channel. But I think he's going to surprise the markets with what he says. I think he's going to say some pretty hawkish stuff. And he's going to have the PPI data, which is showing that inflation, obviously, stuff is not getting better. I just don't think we have a lot of good information. And if core doesn't go down, and especially if we don't get a negative print on month over month, there's going to be a rebound on this year over year CPI. I don't think it'll be this month, obviously, because of the consensus and the projections and stuff like that, but maybe next month. But really, until we get a negative month over month, we haven't beat inflation. And they have been saying that for a while. We just keep getting this month over month bouncing of, 0%, 0.4%, 1%, things like that. So, realistically, until we get that beat, we're not going to get it. So that's kind of what I'm watching for. I think we could end up with a very, very aggressive red week ahead of us. Obviously there's a scenario where I'm wrong and Jay Powell comes out super bullish or dovish and says, we might slow rate hikes. We're seeing case that inflation's taming, blah, blah, blah. And we could see a huge rally, and I'm also eyeing a case of a very flat open on CPI. The last, let's see, 1, 2, 3, 4, 5, 6 CPIs have had massive moves, and pretty much every move is getting bigger and bigger and bigger and bigger. We have only had one CPI realistically, which was in May, that didn't open and do anything. We did end up closing the day red still, pretty red, 1.59%, but we could be due for a flat open. However, I still think that inflation and the numbers are important enough that the market's going to have a big reaction. So looking at the weekly chart here, I'm talking about our peaks and cycles here. These are our cycles. We're starting this next cycle down. And I don't know where it's going to be, if it's going to be like here, it could be here, could be something like this. We'll have to just kind of see where next week takes us and what our low is for our channel. But we did close right on the daily 8 and 20 EMA here, and we closed at it, not above it like here. So this is going to show me that we're going to get a breakdown next week. And I truly believe that we come down to the 390s on Monday before CPI. I think we're going to see a lot of risk come off the table. But key level to watch is 398.7. And then for our weekly bear resistance is 407. If we break through that, then we're through this resistance line right here. So I'm not going to talk about futures this week because they did the way TradingView does it when they do the contract update. It always screws up futures. So futures has this really goofy candle here. The candle really should have ended like here, I think, at 40.05 or something like that. But just the way, like, there's like a 0.8% variance or something so basically for the next week or two, my levels are going to be weird on futures until the new contract starts. So I probably won't be talking about futures a whole lot. Going over to the VIX, so we've talked about these cycles numerous times now. You can see this nice trend down, kind of like here, and then we had that big push up. So I'm kind of eyeing that too. This was back in September. I mean, very, very similar setup to September, like I was saying. In September, we had the early push down and touch. We popped up. This was the Jackson Hole stuff. We came back down and finished in this level right here, and then CPI come in and boom, we're off to the races. We're setting up very similar. We had our hard bounce off that 19.7 level, and now we're pushing up. And now we're going to be flirting with this 23.5 level, which this is where I'm eyeing for us to close over on Monday. We kind of have a nice little bull flag set up here, honestly, that could pop us up. The other thing I'm thinking is that regardless of what CPI does, I think the top is in for this rally. I mean, you can see the peaks here. They're very clear, and they're marked. And I think we have, I don't know what and that's the thing too. If CPI doesn't miss and FOMC doesn't dump us, I don't know what the catalyst is going to be, but something's going to take us up here. Unless we break the cycle. We very well could break the cycle, but I'm just not convinced that we're going to break it yet. So that's kind of where I'm at. It'll be interesting to see. Next week is going to be extremely volatile. I expect a huge week, whether it's up and down. You know, we could get a flat close to the week, but we could still probably have a huge just range of movement. So, all right, hope you guys have a good weekend. I will be posting the trading plan to the Discord sometime probably tomorrow for FOMC and for CPI. So, all right, you guys have a good weekend. Thanks for tuning to this video, guys. I hope you guys enjoyed it. Don't forget to hit that subscribe button to stay updated to my videos. This is the lifetime Discord link. If that does not work, go ahead and drop me a comment or send me a message and I'll get you a new one. On the Discord, I do pre-market update with key supports and resistance from overnight. I also do live analysis and commentary throughout the day on SPY and Tesla. And I also do my live alerts for callouts for plays that you guys see in my daily log. You can follow me on YouTube, Twitter, Instagram, TikTok, and Reddit under Daddy Dersh.